Hello and welcome back, everyone, to the FinServe podcast. I'm your host today, Jamie Hopkins. I'm excited to be joined by somebody here who's going to dive into the tokenization, probably a little bit of the crypto world, really everything digital assets. A good friend, Will Peck from Wisdom Tree. So, Will, excited to have you on the show today. Hopefully, a really good intro, although I will say a lot of the younger professionals out there probably know more about this than our more senior professionals in this space. But welcome to the show.
Thanks a lot for having me, Jamie.
Yeah, so tell me a little bit about your background for everybody listening. How did you get into this, and what's your story a little bit?
Yeah, absolutely. So I'm head of digital assets at Wisdom Tree. I'm based in the New York area. So Wisdom Tree, for your listeners who aren't aware, is a global asset manager, ETF sponsor, kind of well known within the US ETF community as one of the original kind of independent ETF firms. Today, we manage about $130 billion globally. We're a publicly traded company. So I've actually been with the firm for it'll be 11 years this September. So quite a long time. We've got a lot of long tenured employees, including people like Jeremy Schwartz and others you know. But I haven't been in digital assets the whole time. I started my career in investment banking at Bank of America Merrill Lynch. Wisdom Tree was actually a client of mine, and I remember traveling with the management team, meeting investors, and they were pitching the company, pitching the value of ETFs, and I just became a believer. And I was not every reaction in every company meeting you do, but for this one, I was very much a believer. Ultimately, came up with a job to come in house, and that was just about 11 years ago. Originally, I was doing general kind of corporate strategy stuff, working for the CFO. And ultimately, as we were doing more in blockchain crypto, thinking about this as a new initiative, I put my hand up along with some other colleagues, and we started up this new business unit within the firm. And that was probably about 4 years ago at this point, and it's certainly the market's moved in that direction a lot. So quite excited I made that decision when I did.
Yeah, it's pretty exciting, and actually over that 11-year span, you might not know exactly where it went, but I do know Wisdom Tree's had a pretty great growth story over that 11-year period too.
Yeah, absolutely. It's funny. I joined at the days right when we had two incredibly hot funds. I mean, hot funds isn't maybe the next term, but they were very popular with investors. And then there was a great ride up, and then a ride down, and some outflows. But through that, we just kept building, kept doing stuff, kept trying to do the right things for our clients, right things for employees, for shareholders. And then we've had a great kind of run recently, and we feel really well positioned with the stuff that I'm doing in digital assets. So it's quite an exciting time at Wisdom Tree.
So when you look back 4 years ago, what was the spark that said, "Hey, I'm going to go over here into the digital asset space"? Like, was it just everything going on out there? Was there a particular day or moment or event or conversation you just said, like, I've got to start pushing in here?
So for the firm, it was, Wisdom Tree's always been an ETF company, at least in its kind of iteration as an asset manager. We're about 20 years ago when we launched our first ETFs. And again, this was before my time. It was really an idea of having a better index and the better structure. The better structured in ETFs as a superior vehicle to kind of traditional mutual funds for most investors to access kind of the US stock market or Japanese stocks or global bonds, whatever it might be. It may seem obvious today, given that ETFs have taken in trillions and trillions of dollars globally. It was not so obvious 20 years ago when people were in the space. But really, that idea that that the technology matters to the investor experience, and ETFs were really a new technology. That was kind of an important element in terms of how the firm's story. So our CEO, a guy named John Steinberg, he came to me and some others at the time about 5 years ago and asked the question, what could do to ETFs what ETFs did to mutual funds, right? Or is that the right way to think about it? Is there this next step in asset management? At about the same time, we had been looking at Bitcoin, as a lot of people had, as kind of an alternative to gold. We actually launched one of the first Bitcoin exchange traded products in the European market back in 2018, I believe, which was much earlier than it was allowed in the US. So kind of a confluence of those two factors led us to say, hey, maybe it's not like perfectly like the next analogous to ETFs to mutual funds, but there's enough here. And we gained a lot of conviction that digital assets and tokenization should be a focus area for the firm. And stable coins kind of implicit in that as well. So that was how the firm came to this. For me personally, I was just open-minded. I didn't have it wasn't something I was doing in my free time. You hear some stories about people trading in DeFi, and then kind of that wasn't my experience at all. It really came through work, but it was more of kind of recognizing that the way things are isn't how they're always going to be, and having an open-mindedness to that. And I think you'll meet people in financial services who very much do not feel that way, and they're very much like, this is how it's always been done, this is how it will always be. And then you've seen, especially with the advent of like ETFs, a lot of people saying, hey, there's a way to do things differently that can be better for our customers. And it felt like something similar was happening then, although, a lot more to still do.
Yeah. I think you're spot on too when you talk about there's people still with these kind of blinders on around digital assets, and there's some fairness to it also. But I'd say a lot of my time when I spend time, especially with investment professionals, which is always interesting to see the investment firms that have moved forward with this, because a lot of traditional CFAs and investors are like, but it doesn't fit any of our investment boxes, and like it doesn't follow right, like historical trend stuff, and you can't model it well, and that there's a lot of hold up there, right? They just don't believe in it, the sense that they've really thought about real assets and companies, and there's definitely a struggle going on there. So I find it really interesting to see the push forward here. Let's kind of level set, I think, for people on here. I've been writing on digital assets. I think the first thing I published was in 2009, oddly enough. So I've been writing on this in, 16, 17 years now. And what's funny was when I wrote on it back then, like I think the first article, right, didn't mention cryptocurrencies at all, because they really weren't a thing yet. I guess maybe we had a couple, but arguably really nothing at that point. And, at least not mainstream yet. And I wrote an article last year. We did some research and found kind of the average digital asset value for Americans sits around $191,000 now, which is really high and kind of shocks people. But the first text I remember getting, I sent it to a friend, and he said, I don't really want to read anything more about crypto. And I was like, well, digital assets is not just crypto. So how about level set us on, like, when you say digital assets, what are you talking about? What's in that bucket today?
Yeah, absolutely. And we use that term pretty expansively to kind of cover anything that is kind of represented on typically public blockchains. But I think that gets to a key point. Like we talk about, there's crypto digital assets, like the asset class, or you could say it's multiple asset classes. And then there's crypto digital assets, the infrastructure. And I mean, the most typical example is with Bitcoin, right? Bitcoin as an asset. It's Bitcoin on the Bitcoin blockchain, and it's a gold-like asset. And I think people can have it's performed incredibly well for the past 20 years or whatever, right? But less than that. But I think people can have very reasoned debates on like the merits of a non-cash flowing gold-like asset like that. And I think it's totally fair for some people to be skeptical and say like, well, I don't believe in gold as an investable asset, so should Bitcoin be an investable asset? And like, you can make that call for yourself. And that's like a different discussion. It's also a different discussion to say, is Dogecoin which was created as a joke, is that an investable asset? Like, how do I think about that? And there's a whole spectrum of things you can do within the crypto category that might have like wildly different investment profiles. And I think it's important to be clear what you're talking about within that, where like Bitcoin is different than Ether, is different than Dogecoin, and on down the line. Again, it's all very different than crypto as infrastructure, digital assets as infrastructure. And I put things like stablecoins in that category, where stablecoins are, and taking a step back, what blockchains are distributed databases, right? It's just a new record-keeping technology, and the tokens that exist on these blockchains are kind of the records of it. So essentially, when somebody's saying on Bitcoin, let's say, I've got 5 Bitcoin and you've got 2 Bitcoin, Bitcoin is just a record-keeping mechanism. It keeps it secure. It keeps it updated. It prevents double spending. That's kind of that technology, infrastructure there. And I'd say the more you dig into this, the more you think about how financial services is just records on top of records, parallel to other records. And that's actually foundational to what this all is. Um, so with tokens as records on public blockchains, you're able to effectively represent other items that aren't kind of like natively issued assets or like native coins, for example, on blockchains and get some of the benefits of that record keeping technology. The one that's been most prominent in the news recently has been stablecoins. So stablecoins are, you can define them different ways, but the most common today is US dollar instruments on chain. So tokens that represent one US dollar. The most prominent examples are essentially backed by US dollars, where there's some issuing entity saying, hey, this token that's out there is worth one US dollar. You give me token, I'll give you back one US dollar. Um, and that brings essentially this dollar instrument onto public blockchains. And people have found an immense amount of use cases and utility from that technology. And we've seen that with immense value in this space, where today there's, I think, something like $270 billion in stablecoins worldwide, up from next to nothing all of 5-6 years ago. So there's been a great amount of growth in this space, and it's caught a lot of political attention in the US, where there's been the Genius Act just passed, which effectively sets out a regulatory framework for stablecoins in the US. You're hearing all sorts of major financial services companies launching stablecoins. WisdomTree's got our own stablecoin. And one of the major stablecoin issuers, Circle, just IPO'd in really a blockbuster IPO that got a lot of attention as well. And it's really been one of the major topics in financial services with applications across payments, fintech, and broader financial services as well.
Yeah, and this is a great kind of conversation. I think stablecoin is really interesting. A couple questions I have for you that are just on the top of my mind. So, and I'm not super well versed in this, so you'll have to correct me where I'm getting things wrong. But is it Terraform or Terra? That's one of the ones that's the notable problem child, right? That
Yep.
filed for bankruptcy. And I think in short, right, was a stable coin 1-for-1 US dollar versus whatever was it? Was there a coin called Terra or Luna? I forget.
Yeah, it was I think it was
Yeah,
Luna was the coin. Terra
coin.
USD was the stable coin. Yeah.
Yeah. And so one of the things that I believe happened there, right, is that they didn't have the dollars to back the coins.
Exactly.
Right.
Exactly. It was something they called it an algorithmic stablecoin, which tried to maintain the peg to one US dollar using effectively like a mechanism where it would issue more token. Like it was done algorithmically without like the reserve assets backing it. It looks like, I think if you go throughout history, a lot of other kind of Ponzi schemes that have existed in the past. And I think it gets to a very clear point of, you can say something's worth $1, but like what is actually the mechanism that's backing up that dollar? Is it able to withstand an attack from third parties and things like that? And what the Genius Act spelled out is, if you want to say you're a stable coin in the US market, you need to be doing this under some federal banking or state level banking supervision. You need to have a clear reserve management program that could be invested in dollars in bank accounts, and also in US Treasury bonds that are short term, and also in US government money market funds. So this is a type of evolution that's happened in this space. And I think some of the what like regulatory clarity or legal clarity is trying to bring to the space.
Yeah, I've always found that interesting from the market cap conversation around different cryptos. It's a very similar issue, right? As somebody says, hey, I've launched 1 million of these. We sold 1,000 for $1, so it's worth $1 million of market cap. You're like, well, there's $1,000. like that's all that's actually changed hands here. Like, I don't know that this thing's worth $1 million.
I think that's actually one of the fundamental ways to understand the past 5+ years of finance. Is like, there was a great, I love money stuff, the Matt Levine blog. There was a great story a few years ago about a deli in New Jersey that ultimately got a market cap of like $150 million. And I think some major hedge fund managers, something tweeted about it, which only brought more attention to it, which brought the trading higher. And it gets to the point of like, what is market cap, right? And like the simple way you do it on all these, aggregating websites and stuff is just saying it's price times shares outstanding. It does not do any sort of liquidity adjustment. It does not look at true liquidation value or anything like that. So if a couple people are tossing shares back and forth to each other that are worth $25 and you multiply that $25 times the shares outstanding that aren't trading at all, you can get some crazy market cap numbers that, does not reflect the true underlying value of like what somebody would pay for that business. And I think that nuance gets missed a lot in these discussions, and it certainly has relevance for crypto, where things trade at what they trade at sometimes, not always for rational reasons. And it does not guarantee that asset is something that can be liquidated in total for that much money.
It's actually a really interesting thing. Some people have actually watched, it's a documentary, and I forget which had it on, but it's the sports memorabilia fraud thing, right? And it's like Operation Bullpen or whatever. And that was essentially all they were doing, right? They'd go buy these cards that have another buyer who is like, hey, $15 million for this card. But they were all one group. So the money actually was never really changing hands. They were essentially inflating the value of these and turning around and selling them for $6 million and saying, you got a great deal. This thing just sold for 15. And it was this, I mean, hundreds of millions of dollars of sports memorabilia fraud. And it went on for like a decade. Like it was a long-term fraudulent system with buyers and sellers. And it, really is creating the same thing, like an inflated, now that was just pure fraud, right? So, some of this other stuff's not pure fraud, but it gets back to like, what is something really worth, especially if you have buyers and sellers that are all really the same couple people that are bouncing shares and tokens back and forth. Definitely something to watch out for. So super interesting stuff. So let's go. I do want to talk about, where do you think the market is going from stablecoins? So I had brought this up in an interview, I think with Barron's a couple weeks ago, that I said, as odd as it might sound, I actually think that stablecoins, and I think most people disagree with me, but I think stablecoins actually represent, although they're kind of in the same bucket, a bit of a risk to what we say is traditional crypto and like the argument behind crypto. Because while yes, they're all kind of in one bucket, I actually think stablecoin solves for a lot of the problems that people said that crypto and blockchain was going to solve for from a money standpoint.
Yeah, I think that's a fair question to ask. And I mean, one example is, certainly domestically, we don't see a lot of examples of people using Bitcoin for like day-to-day payments, right?
Yeah.
It's a volatile asset. We've got a stable price system here in the US dollar, mostly stable. Like it's not how goods and services are priced or like the underlying inputs, right? And so you end up with kind of an idea where it's almost kind of like a hobbyist thing to pay with Bitcoin versus using US dollars or a similar instrument. So I think the idea that stable coins, are going to, or that crypto is going to change like day-to-day retail payments, certainly in the US, probably isn't happening that way, setting aside stable coins, which might. I think you can look overseas where people don't necessarily have access to a stable currency. Well, maybe they do with Bitcoin, not stable, but like something that wasn't guaranteed to be losing its value, right, or getting inflated away. And now they also have access to US dollars potentially in the form of stable coins, which gives them an even more stable instrument that they can hold value in. And it certainly seems to be a lot of utility there. There's some great research papers on stablecoin usage in emerging market countries. And if you wanted to point to some non-crypto use case of where stablecoins were getting used, that was kind of version 1, I think, which was very clear that like you could go into Turkey, you'd go into other countries like Nigeria, and you'd be seeing examples of people just wanting to like have a better life for themselves and their families, converting their currency into stable coins or saving in stable coins because there was demand for US dollars. So I think that raises a good point. It's like, so in that use case, what's still the utility of some of the other crypto assets that are out there? And then I think you get into the wide spectrum of like what these things are trying to do. And one thing I will say with stablecoins, especially as we've seen struggles with some of the algorithmic versions, is there's always a pile of cash or treasuries. Like there's always an issuer behind them, right? Which is just fundamentally different than how Bitcoin works, right? Where Bitcoin is a truly decentralized, store of value or means of exchange, right? Where one person or entity cannot take over that network or enforce restrictions in the way that a stablecoin can. Like Circle has the ability to freeze the USDC that might be sitting in your wallet. That's just a fact. And I think so. They solve slightly different things in that regard. But I think it's certainly true that if you're just looking for the stablecoin has exported the US dollar in a way with great technology and frankly some clarity and transparency in terms of money laundering in a way that is actually quite impressive, I'd say.
So let's shift a little bit out of that over to tokenization. And, I believe that you'll get to this, but I'll just start with it. I believe Wisdom Tree has done something pretty cool with one of your apps, right?
Yeah.
You've built that out in some tokenized world. So I'd love to hear about that.
Yeah, absolutely. So, I view stablecoins as kind of like V1 of tokenized assets, right? Tokenized assets, tokenized real world assets, RWA is what some people say, is just representing something that exists off chain, on chain, right? To take advantage of that new modern record keeping technology or distributed record keeping technology. So, stablecoins bringing dollars on chain, and then we see an expansion of things from there. So Wisdom Tree has a suite of kind of funds and assets in addition to our own stablecoin. The largest of which would make sense, is a money market fund. So our tokenized money market fund, WTGXX, has I think close to $900 million in assets under management in it. So very strong growth this year, and it's effectively always priced like a dollar, like a money market fund or the NAV is. And it also pays yield, which is different than stable coins, which don't natively pay yield. And then we've extended it out to a range of other, yielding and kind of equity-like assets or equity assets from there. So that's the set of exposures that we have that we've represented on public blockchains. We've done this on 6 different public blockchains, and we make it available to customers, either if they're US retail customers through an app we have called Wisdom Tree Prime, and if they're businesses through a platform we have called Wisdom Tree Connect. So if you're a retail customer, you can download in the App Store the Wisdom Tree Prime app, and you can start you can buy one of Wisdom Tree's funds. You can then transfer it from the app to your own self-custodial wallet, and the assets can sit there. And you can just hold them in your own infrastructure. If you want to hold the US 500 fund there, or a money market fund, but you're a crypto native and just want to do it in a wallet like MetaMask, for example. So that's the example with Wisdom Tree Prime, really trying to serve initially this on-chain community who's trying to do more and more of their financial lives on-chain. And then the second example would be some of these on-chain businesses, and also increasingly corporates. So corporates who are using stablecoins for treasury management to do global payouts, payments to vendors, send money to other entities. If they're looking for a savings vehicle like a money market fund, for example, or access to other investments or other kind of orchestration things, they'd be able to do that through Wisdom Tree Connect.
Okay. Question. So where does where does the yield come from in that situation? Like, where is it being generated, calculated? How is that returning value back to people?
Yeah, so the money market fund just works like any other money market fund. It's a 1940 Act registered money market fund, WTGXX, sold by prospectus. So you can go onto Wisdom Tree's website and look up. So if let's say you're buying $100 worth of the money market fund. So let's say we've got a net $100 subscription that day. We take that $100, working with our partners like Sub-Advisor, et cetera, invested in things like US Treasury bonds or reverse repos or whatever it might be, that generates the yield. The yield is calculated on a daily basis. So we accrue dividends daily, and then it pays out monthly. But that comes directly from the underlying Treasury bonds, which is different than how things might work in other parts of like the crypto or DeFi world, where you're kind of posting something as collateral, or you're getting loans for yield on that. So it is quite different. This is just representing a money market fund with the value on chain.
Yeah, so it's very different than staking your crypto, right? And
Yeah.
yeah, because to be honest, I've been through some presentations on it. I still don't fundamentally understand where
In
like
staking?
yeah, like I've always struggled with it. Like I understand that places are paying, but I'm just like, but where is the value coming from? Like this one makes sense, right? Like you've got the Fed, you got Fed funds, it's going to the money market, there's a spread, you give some of that spread back in the money market. Like I totally follow that, right? Like it makes sense to me. I don't quite understand staking, which maybe is not that's not an intro level topic, but where does the yield come from in staking when you're taking your crypto coin and essentially lending it back for a yield?
Yeah, I think there's a few different things that all kind of get conflated in this yield conversation in crypto. So there's what I just described with a money market fund, which is just kind of like true native yield, right? That's just like you are getting interest from the US government for buying treasuries that's being passed through to shareholders. And then more of these crypto native things could be something like DeFi, where somebody might be posting um, they might be willing to lend out their stable coins to somebody else in the DeFi space in exchange, and they're holding collateral against that loan, and they're getting yield based on that. So you might post it to a lending pool, which is really just a collateralized loan program where there's kind of a unlike if you think about it as like a money market, there's like a supplier and there's like a demander on each side of that trade, and the supplier earns yield on it, the demander pays yield on it. And DeFi has just done this in a way where they don't need to have like a single person in the middle making that happen. They're able to do it programmatically using smart contracts.
Yeah.
So that's kind of one category of things. And then the other category is staking, where some of these blockchains, notably Ethereum, also Solana, have established their consensus mechanism using a proof of stake method, which, and again, I'm not a total expert on this, but effectively the idea is that pools of capital, so pools of like Ether, can be held and posted on Ethereum, and they validate the network's transactions. They secure the network. In exchange for that, they get a staking reward, which is yield that gets passed back to them. In exchange for that, also, there is a risk that if they are posting a wrong transaction, there's something called slashing, where the risk they could lose that Ethereum that's posted there. So that's the basic way that staking works, where you can have people operating nodes validating transactions on the network. They get some benefit of that in the form of staking rewards in exchange for some risk of validating the wrong blockchain, for example.
So for a young person entering financial services, like what's one piece of advice you would give them around digital assets today?
Yeah, I mean, look, it certainly feels like it's arrow up and everyone's talking about it, but like these things always go in cycles, and I think there's inevitably going to be some volatility from here. And I think the important thing is just if you're working on something that you believe in, that you keep working through that volatility, right? Like you don't get too up, too down in terms of where the market is or how much people are talking about it and stuff. You just keep kind of marching forward and trying to figure out the things that are going to be bettering clients. I think within the crypto digital asset space, there's been a lot of price upward movement broadly. And I think now people are really trying to figure out, and without any more excuses of regulation or anything like that, some true use cases that are like bettering people's financial services lives. And we're starting to see that with stable coins. We're starting to see that with tokenized money market funds, other tokenized funds and assets. But I think a lot more needs to really get proven out as this kind of market grows and markets expands. And and I'm excited to be one of the firms that's doing that. I don't know if that quite was perfect advice, but that's, I guess, what I'd say.
And then just to wrap up, so where's a good place, Will, for people to look at the work that Wisdom Tree is doing or you're doing on this topic, or any white papers you want to, anything like that you want to suggest over?
Yeah, I think we've got a great blog at wisdomtreeprime.com. You can go to that website and just read our blog, which has both kind of general macro commentary on crypto, and then also I'll write about some specific things about our business, what we're doing, our strategy, how we see things. So I think our blog is a great resource in the space for anyone who's interested in learning more.
And I'll give a quick shout out to the employee resource group at Wisdom Tree to Win, who helped sponsor a bunch of young female professionals to get out to invest in women from FA Magazine this year. And so, not just doing great work in this space, helping give back and drive the future of this business too. And thank you, I know, for coming on and spending some time with us today, Will.
It's my pleasure, Jamie. Thanks for having me.
And thank you, everyone else, for listening to this week's episode of the FinServe podcast. Make sure you subscribe so you never miss an episode. And again, Jamie Hopkins here. Have a great day, everyone.